think I'm the only non-trivially large investor in both SpaceX and Relativity Space. Relativity Space has SpaceX is clearly just crushing on all cylinders. And they're really the only game in town with respect to launch capability. And if you just Google it, you'll see that the Europeans, have a hit or miss capability on launch. The Russians are completely unable to do launch now because of all of these sanctions. The private companies in New Zealand or the United States have also had fits and starts, really incapable. Relativity, which is now the second most highly valued space business, is about to do a launch in the third week of January. And the big difference between it and SpaceX, which is sort of why we did it, this is a early YC company. I did the Series A and kind of went along the whole way. They have 3D printed everything. And the reason why 3D printing is interesting is you take so if you think a rocket costs $5 billion if built by NASA, Elon was able to take that to 100 to 500 million. And if you 3D print everything, you can take that cost to like 5 to 50 million. And so it allows you to just have this repeatability and manufacturability. Now, SpaceX also has a lot of 3D printed parts, but Relativity is entirely 3D printed. It has a launch in 3 weeks at Cape Canaveral, I think. And we have a $10 billion order book that gets unlocked. So I don't know how to see beyond a lot of these market forecasts right now. So I'd rather pick a company. I'll pick something in my portfolio. If the rocket does not blow up, there's a $10 billion order book, and this company is now on a trajectory to be as valued as SpaceX. Wow. At the end of Q4, I did 5 deals, and 4 were pro ratas. 1 was a new deal. And they were all clean markups. So the 4 deals that other people put money into. And I was looking at them and I was trying to figure out, okay, what differentiates these things? And Freebird, to your point, these were super clean startups with very clean cap tables that had clear progress. And then conversely, I had 7 converts showed to me for companies whose valuations were anywhere between 3 and I would say 12 billion. And I did none of them. And not only did I do none of them, nobody else did any of them. And the problem was the real market clearing price was 80 to 90% down. And so I was like, what is going on here? So Freebird, to your point, I don't even think it's just cash intensive startups. I think it's like all growth companies are in a really bad place. I thought that this growth stuff would get sorted out in 2 to 3 months. And now I'm worried it's 2 to 3 years. I think all these converts are getting done.
That's where the rubber meets the road on all these deals. Yeah, that's right.
Who does the convert benefit? The convert benefits the VCs who want to maintain the illusory valuation that they had before. They do that to assuage the limited partner who gave them money, that the marks aren't as bad as they thought. But the people that really get screwed, as Jason said, are the common shareholders, because eventually those convert deals that do get done, those people will end up owning the company. The cap table gets completely flushed and reset, and the employees get wiped out. Work get fucked, and the people who do none of the work and who just want to maintain this shell game gets to basically live another day. My biggest business loser.
Yes, please.
I think that the biggest potential business loser this year is Google search. Ooh, as measured by pure profitability and engagement. I think it's easier for me to see where the usage comes from, as opposed to picking OpenAI or ChatGPT in terms of where the usage goes to. And the reason is because I think a lot of people don't still fully understand how machine learning and AI work, but just 30-second primer. There's 2 big buckets of work. There's what's called learning, which is how you learn how to make predictions. And then there's what's called inference, which is when you actually type something into the search box, you get the answer. The thing with learning and what ChatGPT is showing is that they have learned by crawling the entirety of the web. There are 5 or 6 other organizations that are capable of crawling the entire web in terms of cost, in terms of compute, in terms of the quality of the transformers and the quality of the AI. And so I find it easier to predict the decay in the quality of Google search as that much better than everybody else than I find it is to predict who will win, because I think that with enough time and money, Oracle, Microsoft, Google, the Chinese internet companies can all compete. Facebook. And so I think that you'll converge on the same training, which will lead to the same inference. And so I think consumers end up getting confused and will end up being able to get high quality search results from many places versus today. You would only think that Google is the only game in town, quite honestly, for most people.
Well,
so I think that
the statistics show that.
Yeah. Google could lose 10 or 15% of usage to all these other sites. And that may not make any of those sites that relevant, but it'll have a material, measurable impact to Google and Google's bottom line.
Fantastic.
The best-in-class broadband connection for a plane is called Ka band, and it costs $500,000 a year.
That's ridiculous.
And you can replace it for a tenth of the cost, and Starlink on a plane is dramatically better, bidirectionally. So I think Starlink is going to go public, and I think it's going to be the best chance that we have of opening up the capital markets in 2020.
Yeah.
Actually get everything that TikTok has on YouTube Shorts. So I don't think TikTok is that important because it is not actually, there is no sticky network effect inside that app. So there isn't usage that's dependent on people or a graph that you build. It's a lot of passively consumed content, and so you're getting pushed a lot of algorithmically defined content. You can do that on YouTube. And so I actually don't think it's that meaningfully important if TikTok goes away. I think the content creators stay. It's harder for them to build a business on YouTube Shorts. But if you look at and measure the density of content inside TikTok, it exists almost one-to-one on YouTube. Inside there, then I think people would have a reason to complain to somebody, whether it's your representative or whether it's somebody else, to say, hey, don't do this. This would have a deleterious impact on my quality of life or my quality of experience. And you could make that clear claim on Instagram, Facebook, Google, YouTube. But TikTok is much more brittle that way. And that's why they need to get public sooner and monetize this bloody thing. Because I think that it's very easy, actually, to deconstruct TikTok's value into these other places. Actions is a great example where he actually got banned by TikTok and then diversified on his own. And now what he does is he publishes across multiple streams. And if you look at all the big creators, they all do that because it makes no sense to actually give the power to any one of these things.
Why have it to
go and pick that inflation, which people expect to fall off a cliff, doesn't fall off a cliff as fast or as meaningfully as people want. And so I will explain inflation as 3 different chapters, and we've seen the first 2 chapters play out. So 2021, chapter 1, was all about energy inflation. And, we all talked about having almost $10 gas at the pump, and what does it mean for everybody? And it caused that initial spike in inflation. And then we had it come off, and Sachs called this. He said, we're going to have this sort of double hump. And 2022 was really the story of goods inflation, right? All these prices and all of these things went up because the input costs went up, and we all had to bear the implications of that. But then that started to ebb. And now, if you looked at the tail end of 2022, what I found super interesting was the number of articles I saw about wage inflation. Whether that was Biden using an 1800s era law to prevent a railroad strike, the number of states that increased minimum wage, the trend around unionization. So in general, my thought is that the pendulum is swinging very markedly away from capital and towards labor. And as the labor participation rate stays low and continues to go down, and also it's compounded by an unemployment rate that may go up, right? It's going to be harder and harder to get people to do the work you need at the company you have unless you pay them more. And if that gets exaggerated, then inflation will stay where it is. It won't be as muted and it won't fall off a cliff as people want.
It'll be persistent.
That's my big contrarian wager for this year, is that we see
quite contrarian.
We see wage inflation that keeps inflation not going down as much as people want.
This is contrarian.